Hello everyone, most losing trades happen because we carry the wrong mindset into the market. We want to believe our thinking is correct, so we keep following it. Emotionally and mentally, our brains work like a machine. When they're programmed with the right mindset, our actions become correct. But when they're programmed with distorted thinking, our actions become distorted too. Back when I was studying information technology in college, logical thinking became deeply rooted in me. Thankfully, that mindset helped me a lot in trading. Honestly, it was probably one of the biggest reasons I was eventually able to make profits in this market. When I first started trading, I was just like most beginners. I lost money badly. Then I began studying online and reading books. But here's the problem. Around 80% of traders lose money, so I started wondering how useful that information really was. At the time, though, everything felt new and exciting. I tested every indicator imaginable, explored countless trading strategies, and even looked into expert advisors, trading robots. None of it worked. I still kept blowing accounts. Then one day, I had a simple thought. What if we ignored all technical analysis and entered trades randomly? Let's say we randomly buy. Only two things can happen: price goes up and we profit, or price goes down and we lose. If our stop loss and take profit are equal, for example risking $100 to make $100, then mathematically we have a 50% win rate. Yet somehow many traders still blow their accounts within days or even hours. Why? Emotions. When we win, we take tiny profits. When we lose, we hold on to trades forever. Imagine buying Bitcoin at $70,000. Price drops to $60,000, but you refuse to cut the loss because losing $10,000 feels painful. You keep holding, hoping. Eventually the market recovers slightly, and the moment you're up just a few $100s, you close the trade immediately because you're relieved to escape. That cycle repeats over and over. Small wins, huge losses. It feels easy at first because you keep making a few $100s here and there. But eventually comes the one trade that never comes back, and your account gets destroyed. If you actually use proper stop losses and take profits, even random trading wouldn't destroy you quickly because your win rate is still mathematically close to 50%. Over the long run, the results tend toward break-even. That realization gave me confidence because I understood that, at the very least, I could stop blowing accounts. From there, I focused on increasing that 50% probability. To do that, I needed to truly understand how the market works. I spent countless hours studying charts and asking deeper questions. Why does price move? Why does it rise or fall? How do indicators like Ichimoku or MACD actually work? Does price truly follow those formulas? Every answer made me realize the market wasn't random. Everything had connections and logical behavior. I gradually built my own framework and called it the bull and bear laws, because it constantly reminded me to trade according to the natural behavior of the market. Understanding the market is one thing. Applying it successfully is another. But once I understood the market's nature, I could instantly recognize whether a trading method was effective or not. If a strategy went against the natural logic of the market, I knew it wouldn't work long term. Eventually, I developed entry rules with higher probabilities and wrote them into a complete trading system. Still, a trading system is only a theory until it's tested. So I spent time backtesting, collecting statistics, refining weak rules, and improving strong ones. That process, testing, correcting, improving, repeated endlessly. And honestly, that same process applies to mastering any skill in life. Eventually, I returned to the core reality of trading. The financial market is basically a giant probability game. Every decision can either be right or wrong. We can't control outcomes, but we can improve the probability of being correct through preparation. The more prepared you are, the better your decisions become. Think about games like dice or gambling. If you risk $1 to win $1 with a 50% win rate, over enough rounds you eventually break even. Professional traders, however, don't just rely on win rate. They control risk and reward. For example, if I risk $100 to make $200, I only need a 40% win rate to stay profitable. Out of 100 trades, 40 winning trades times $200 equals $8,000 profit. 60 losing trades times $100 equals $6,000 loss. That still leaves a net profit of $2,000. That's the real mindset behind risk management. At one point, I felt unstoppable. I had good entries, strong risk management, and confidence in my research. But ironically, the moment I became overconfident was the moment I became careless, and the market humbled me again. That's when I realized something important. No matter how powerful your strategy is, if your mindset and discipline are weak, you still won't survive. A trader without emotional control is like a warrior holding a legendary sword but too afraid to fight. Fear causes early exits. Weak emotions cause random trades. Breaking your own rules eventually destroys you. What I lacked back then was trading psychology. It took me a long time to improve that part of myself. Fortunately, I've always enjoyed learning and optimizing skills. Whether it was learning to draw, training both hands to write at once, or mastering strange abilities people thought were impossible, I realized something. Almost anything becomes possible with enough focused practice and the right process. Trading is no different. You must first believe improvement is possible. You can absolutely become a professional trader if you're willing to practice consistently and follow the right path. But persistence alone isn't enough. If you're persistent on the wrong path, you'll only reinforce bad habits. And bad habits become extremely difficult to fix later. That's why successful trading requires two things: consistent practice and the correct direction. So whether you're a beginner or someone who's been struggling in the market for years, don't lose hope. Believe me, nothing is impossible.